Hey guys, my name is Deanna. I am your insurance exam teacher and I help individuals pass their insurance exam within 2 weeks. That is always my goal for people. I've been doing this for about 3 years now. I offer one on one and I also offer group studying sessions. So, whatever it is you're looking for, follow me, subscribe to me, DM me, get on my calendar, and let's help you pass your life and health insurance exam. I love helping people pass that test and getting it out of the way, letting them and helping them get started with new and amazing careers in the insurance industry so they can go and help other people and help themselves too. So, guys, anyways, I love doing it. I can't even tell you all how much I love doing it. In addition to that, I am an agent as well. So, any questions you have about working in the insurance industry and obviously the exam, please drop them in the comments. I would love to get in contact with you and help you out. So, guys, I offer an online class. Like I said, I also offer one on one and group tutoring for the life and health insurance exam. Of course, if you're only doing life or you're only doing health, we can definitely do that too. But my suggestion is always try to do them both together. But anyways, I'm going to go ahead and discuss in this video the differences between life insurance. No, we're going to talk about life insurance, but I'm going to discuss the differences between term insurance and whole life insurance. So, here's the thing, guys. Any insurance policy you talk about, you look at, no matter what, is going to be one of two. It's either going to be a term or it's going to be a whole life insurance policy. We have credit life, universal life, index universal life, decreasing term, increasing term, credit depth life. We have so many different terms that I could literally sit here and just make an entire YouTube video and it'll be forever long of literally just insurance term names. And that is because over the years, those in the insurance industry have gotten super creative when it comes to naming the different types of products and how we sell them and promote them to the individuals. This is why it seems like there's so much information out here when it comes to our insurances, why the test seems like it's a lot of information, but this is what I do. I condense it, I break it down, and I'm going to help you pass and remember this information when you need it. So here's a quick tip I always tell my students, I always tell everybody, you are not in this or trying to do this to get 100. Please do not freak yourself out, make yourself crazy, or stress yourself out trying to get 100. All you need is the 70 or the 80, whatever your state requires, in order to pass. Okay? So please keep that in mind when you're studying for this test, when you're going through this exam. And of course, if you need help, if you need a little bit extra information, those study tips to help you remember that information, recall it quicker during your test, the testing strategies themselves, that is going to make your test easier. Again, get on my calendar, follow me, DM me, either start one-on-one tutoring with me or let's do the group tutoring sessions together. Okay, guys. So anyways, I'm going to go ahead and show you the chart that I've created for the term and the whole life policy so that we can get down to it and you can see what the differences are between both of those policies. So here it is, guys, as promised, the chart that I created for my students to help simplify the difference between term and whole life insurance. And I do this in my tutoring sessions, guys, over and over. There's so much information. I condense it, I simplify it, and I only give you what you need to know. So, like I said a little earlier, insurance people over the years have gotten super creative when it comes to figuring out how are we going to market these products? How are we going to sell them? So we can literally have 25 names for the same one product. And I'm not even making an exaggeration. In fact, I'm probably lowballing that number. But anyways, that aside, no matter what policy you're looking at, reading about, or reviewing with the customer once you're fully insured and sitting down with them, it's either going to be a term insurance policy or it's going to be a whole life insurance policy. And this is the main difference in how you know what type of policy you're reading about or have in mind at that moment. So here's the thing. Term insurance policies, number one, they last for a term of time, hence the name. What y'all will see when it comes to insurance industry, the insurance world, is that the name of the item that you're looking at typically tells you what it's doing or has some major descriptive quality, describes basically what it is. And again, I can get into that a little bit later on and in more detail in my classes. So, anyways, term policies last for a term of time, typically a 1 year, a 5, a 10, 15, or a 30 year. Very rarely have I personally ever seen anything to be in between that. But what happens if the individual does not die within that term of time? Basically, the policy expires and the individual lost their money. That's all it is. They're paying for a specific thing, which in this case is the death benefit, has no cash value. There's the second point. A term policy has no cash value. There's no savings account attached to this policy. It is known as pure insurance. So that is a definition for y'all to know. If you see that term on your exam, pure insurance equals term insurance. So I want you to commit that to memory. Okay, guys? Now, certain term insurance policies can be converted into a whole life policy at some point during that contract. That is going to depend on number one, it has to be a convertible term insurance policy. Has to be that. If it does not say is not a convertible term policy, then you cannot do this. But basically, a convertible term insurance policy, if it is a convertible policy, again, that is the main thing, can be turned into a whole life policy, but we cannot go backwards. We cannot go from a whole life policy into a term policy. And in a minute, I will explain why that is. But anyways, know that. So if the exams try to talk about convertible insurance policies, know that you can only go from term to whole life. You cannot go backwards. All right, guys. So how do we mostly market and sell term insurance policies? Mostly as mortgage protection. So when people say mortgage protection, they're looking for mortgage insurance. This is usually what it means. All right. Now, can somebody buy a whole life policy and have that be their mortgage insurance? Yes. However, that is not how it is sold. That is not how we talk about it. And when we're talking about mortgage insurance policies, they typically want a 15 or 30-year term, whatever number is going to match their mortgage. Okay, guys? Now, a term insurance policy can be decreasing, increasing, or a level term policy. So that death amount, that death benefit, that 100,000, 200,000 that they've requested in their application is either going to decrease over time, it's going to increase over time, or it is going to stay the same throughout their entire policy. So the decreasing and the increasing can work like this. And maybe in year one, you're at $200,000 death benefit. If it's increasing in year two, you're at 210, 220, and the price is going to go up a little bit. Now, if it is a decreasing policy, year one is $200,000, maybe year two is $190,000, $180,000. It goes down. However, the premium, the price that the customer is paying stays the same. And if it's level, your price and your death benefit stays the same. It is level throughout the entire contract. Okay, guys? So that is term insurance policies. Now let's talk about whole life, which is, again, one of those things that is described in the actual name of what we're looking at, right? So a whole life policy, this is a policy that is going to last up to age 100 typically. Some policies do last up until age 120, so I don't want any of y'all coming at me in the comments like my policy or my company sells one that lasts to 120, whatever. Yes, they can. However, the test is going to cap it and say 100. They never say 120 or beyond 100. So for the purposes of the exam, guys, whole life policy goes till age 100. Okay? Again, when I tutor someone, I give them the information they need for the test. And don't give them extras. I don't want to confuse anybody. So therefore, age 100. A whole life policy has cash value attached to it. All this is a savings account. So you have your insurance, your $100,000 plus your savings account. And guess what? They're both being paid for from the premium. So if somebody is quoted at $150 premium per month, $150, 50 of it's paying for that insurance, that $100,000 policy. and maybe 70 of it is going towards that cash value, that savings account. That's all it is. The money for the savings account comes from the premium, and the rest of that premium goes to the company for expenses and whatever else the charge may be. All right. But every month, the customer pays 150, 50 goes for the insurance, 70 goes for the cash value, and it builds up. You're getting 70, 70, 70 in that cash value account. Over time, it's building up. Plus, that cash value account is building interest. That's basically all it is. Plus, as long as this customer keeps paying their 150 a month, they're going to be covered till age 100. Does not expire, does not change, or anything like that in a typical straight whole life policy. And again, I mentioned straight. That is a term to describe a general, no frills, no changes, and whatnot whole life policy. And the differences between whole life policies, I cover that in my tutoring sessions and in my group sessions. So if you're interested in that, guys, again, sign up to tutor with me so that I can explain all of the different types of whole life policies, as well as the different types of term insurance policies and how they behave and what they do. So that is basically what a whole life policy does. A straight life, whole life policy, your coverage amount, your $100,000 plus your savings accounts building up over time, being funded from that premium. And of course, that cash value is earning interest over a matter of time. Okay, guys, so getting to the arrows a minute ago, I let you know we can go from a term insurance policy if that term insurance policy is specifically a convertible term policy. The reason we can do this is because technically all we're doing is we're adding a savings account component to it. We're adding cash value to it. We cannot go from a whole life policy to a term policy, because if we go from a whole life policy, we are essentially taking away that element of that savings account, that cash value, and what's going to happen with that money. So that's going to create a bit of an issue and whatnot, but that is why we do not do that. All right. So make sure that you commit these little arrows and know that that applies to convertible term policies. And when somebody can convert their policy into a whole life policy, if they choose to, because they can always say that they're not interested in doing that, depends on the company. The company and the contract are going to determine how long somebody has to wait from when they start their term policy. All right. So if you may have a 10-year policy, and one company may say, well, at year 5, the customer will have a choice between whether they want to change it into a whole life policy. Basically, all that happens is they are automatically going to get approved. They're going to start, their premium is going to go higher. They're going to start saving up money in that cash value policy. If they say no, thank you, basically their policy continues for the 10 years as a term. It expires at the end, behaves just like a term. Okay, guys. So one more cool thing that a whole life insurance policy has is from that cash value, you can go ahead and take out policy loans for as long as you have your policy. Again, ideally and typically till age 100, as long as you keep paying your premium. And those policy loans begin whenever you actually have an amount able to have a good enough amount. Well, basically what I'm trying to say is you can start taking policy loans from a given whole life policy if there is enough in that cash value account, okay? And that will depend on each individual policy, and you would just want to look at your actual contract to see when that is. Typically, it's about year 3, some may be a little before, some may be a little after, but again, that's what that basically means. Okay, guys, so I hope this helped you. Please let me know in the comments if this breakdown was helpful for you. If you feel that I did a good job, leave a like, leave a comment, follow, subscribe for more information. And if you have any questions, please drop them down in the comment section below. I would love to hear from you all and to know what else you would like me to cover. Okay, guys, again, I am Vienna, your insurance exam teacher.